Okay, folks, welcome to another Sunday Night Futures Live. The markets are open. Hello to everyone. Will, hey, Bob, how's the temp on Long Island? Hot, man. It was hot. Spent a lot of time in the pool this weekend. It was 93 upstate, too. Yeah, I guess I'm a little bit, I don't know if it was that hot, but, man, if they said it was, it definitely was in that neighborhood today. Very, very hot here. But a real gorgeous, gorgeous weekend. Really nice. Hello, everyone. Thanks for stopping by and saying hello. For those folks who didn't see already, I posted best stock charts for the coming week. That was published this afternoon. It's on YouTube. It's also on the website. I also went over our strangle options trade on CrowdStrike. Went into great detail. So please go check it out when you get a chance. Randy, hello. Falcon, I haven't seen it yet. I haven't gone into my email over the weekend. I'll check it out though. See you now. Hello, brother. All right, let's get to it. The futures are open. We're going to go over the futures action. We're going to then talk about the market valuation as we do every Sunday night, and we're going to go over the Buffett indicator. We're also going to go over the Schiller PE ratio and the number one chart you need to be watching for this trading week. Franklin, hey, brother. And then we're going to segue over into some chart requests that I have. And if we have time left, which we should tonight, I don't have a bunch to go over, we'll take some requests from the audience. Matt Carter. Did anyone else see that hit piece by Elon by Anonymous? No, I didn't see that. All right, let's get to it. Futures are open. Dollar. This is a 1 hour chart. The dollar is down. Why does this not seem right? It's open. Something's off here. 90.13. We didn't close. Let me check this out. So I think something's off with the dollar. Yeah, something's off with the dollar. This is an inaccurate quote. This is the closing price from Friday. Looks like they gapped it up and it faded. That's probably why. Now, there's something wrong here. Skip the dollar. This is a bad tick. Something's going on wrong. All right, let's go back to the 1 hour chart. I want to segue either way. It looks as if it's weak. It had a very rough week last week. If we're looking at the dollar, you know we're going into commodities. Larry, hello. The Schiller PE ratio is 37.28. Anxious to get your thoughts on it tonight. We'll definitely go over it. Big Bear, hey, brother. JW, did you see Yellen's comments on interest rates? Not over the weekend. I'm not sure if she spoke over the weekend. They have been doing that. 40,000 headsmen. Aloha. Aloha to you, too. Yeah, cool. Post a link. All right. Gold up slightly. Nice recovery off the lows of the week last week. Still closed down on the week. Silver down slightly. Before we go to equities, let's check out the VIX. We saw breakouts last week on the S&P 500, on the Dow, on the Qs. Qs at least recaptured support levels. The key to make that rally continue up higher this week, for the Qs anyway, you got to see yields move lower. So we're going to go to the bond market in a moment. But first, let's take a look at VIX. The VIX is up off the session highs. Taking a look at equities, let's go with the Russell 2000, of which we are short down slightly, now up, flat on the session. NASDAQ 100 up, a little bit of a fade thus far, very early. This is a 5-minute chart. You can see the gap up and fade. Back to the 1 hour. Oops. The Dow up, but a bit of a fade. Let's take a look at yields. Actually, 10-year Treasury note, not the yield, but the note. Now, the note is lower. Therefore, bond yields, if anything, are flat or slightly up. So let's circle back for a moment to the NASDAQ 100. Let's do this. Just want to get a feel for whether or not we're going to be able to hold this bit of a rally we're seeing here. Very, very flat. We're off the session highs. And if yields move higher, I would expect to see the NASDAQ, it just went red. Now green again. So flat on the session. Let's take a look at agriculture. Go back to the 1 hour chart. Ag is slightly down, struggling. We did see a bit of a correction last week. 4 hour chart. Inching its way back up towards resistance. Yeah, please smash the like button. Thanks, Ricardo. All right. So here's what I want to do here. We're going to do this. We have an ascending wedge formation. I was listening to Kathy Wood over the weekend, and she was being interviewed by Bloomberg. And she's saying that we're going to get a big bout of deflation. And she cited the weakness, in particular, lumber, as her indication that we are now ready for deflation. I strongly disagree with that assertion. She had zero mention of the Fed and Treasury policy, monetary policy, fiscal policy. Her complete thesis or her hypothesis is based upon automation. Wheat is down. Where's lumber? I want to take a look at this move lower on lumber. I got to write down the quote for lumber, the symbol. I'm always searching for it. Here we go. You know, this is only a 4 hour chart. And I have I think Kathy Wood is very smart. I think she's horrible at technical analysis. And I don't know why you would go on Bloomberg and make a big call with today's fiscal and monetary nightmare that we are seeing right now. How you would come out, especially with CPI coming out hot, prices for everything going up higher. Why would you say that you're about to see deflation and you're basing your call, you're citing the lack of a move up higher on lumber, this is only a 4-hour chart. We're only recently off the highs, and we're only off a few percentage points. The macro chart here for lumber, this is it. This is a weekly chart, right? You're going to tell me one down week, that's the end of the trend? I don't think so. Sure. Are we seeing topping action? Yes, we are. This is June, right? Yes. No, this is May. Why is June not showing? Friday was the 4th. They don't have a monthly chart for June yet. That's strange. Anyway, so yeah, we had we have seen a pullback, but way too early to say that lumber's done going up. Way too early. So I strongly disagree with Kathy Woods. Much as I disagree with her buying Tesla just shy of the highs, much as I disagree with her buying Coinbase way too early. I bought it a lot cheaper than she did. So I disagree. Let's go back to the 4-hour chart, which we're already on. Let's wrap up home heating oil. Down slightly. Crude. Down slightly. She's really got to take a look at the commodity complex. I'm not sure what else she's basing her opinion on. Nat gas, of which we are long, is up. We're still holding a 3 handle on natural gas. Very, very bullish. I'm loving the price action on natural gas. You take a look at the weekly chart. Here's your breakout. We broke out the week before last week. Actually, this is the beginning of this week. Last week, a breakout on natural gas. This week, we're attempting to challenge the highs of last week. We got rejected last week at this rising upper band of resistance, and we backed off. So we are currently profitable on the nat gas trade. We're long of natural gas vis-a-vis the sale of naked puts using Boyle leveraged ETF. Let's bring it up. I'm going to roll that position out of June into July. We're up, I think, 44% on it, on the option premium, not on the cost of the shares, but on our option premium that we took in, because we sold the puts, and that premium that we took in, I think it was like $1.30 per contract, something like that. So we're up 40%, more than 40%. Once we go over 50%, I'm going to close it, roll it out, make those profits real, and extend out another month. Ideally, still at that 25 strike. So that way I go further out, reduce my risk, bring in new income. So Boyle, a good week. Last week, we did close off the highs of the session, but overall, we're doing well here. All right. Let's take a look at some valuation information. Okay, so every week I like to do this. I do this because, I've traded several bubbles now, and I can't count the number of corrections that I've been involved with. The one common characteristic right before a major correction is a huge amount of complacency. We have that. The fact that you're seeing GameStop and AMC getting drilled up higher yet again, those two are about to be added to the Russell 1000 index. So, the divergence between valuation, the divergence between monetary policy and good fiscal policy, sound monetary policy, and what we're seeing in the stock market is just astounding to me. And it's going to continue. They're going to continue to prime the pumps, but one day it's going to come to a brutal end. So that's why I'm not calling for a crash this week. If we began to see a crash this week, I wouldn't be the least bit surprised. It can come at any time. But what I will do going into the new trading week is cite what we do every Thursday, and that is the Shiller PE ratio. We are at multi-year highs going into the new trading week. The prior all-time high was set back here during the 2000 dot-com bubble. I traded that market. That was one ugly SOB in the end. And I'm waiting for it. And believe me, the amount of complacency just prior to that burst was ridiculous. It was crazy. Very similar to what you're seeing right now. Diamond hands, paper hands, YOLO. It's nuts. So, very expensive market. And nobody really cares about the valuation of the market until everything starts to blow up, because nobody wants to take responsibility. So the talking heads on CNBC, they're not talking about valuations right now, but they will when everything blows up, because they'll cite the value of the market, the reason being why it's rolling over. They're not going to blame the Fed. They want those people to come on TV and do interviews, and they want their advertising dollars to keep flowing in. So they're not going to talk about this until they need to. The Buffett indicator. I mean, what can you say here? With the exception of what it says, strongly overvalued. I mean, they're using a 2 standard deviation move beyond the historical mean, yet they really need to update this. It's driving me crazy. We're at close to, if not at, a 3 standard deviation move beyond the historical mean. So again, it doesn't matter until it does. Nobody cares about this until ultimately the chickens come home to roost. So how do you manage this type of environment? You know, we're going to do what we've been doing. You know, we're getting ready to add to our portfolio. We have our gold stocks. Gold stocks. We don't have gold. Silver miners. Now it's time to begin adding to REITs, adding to emerging markets. Because I don't agree with Kathy Woods. I don't think that we're going to see deflation. When you have small businesses competing with the U.S. government for employees, small businesses need to raise salaries to get people to get off their couches, to stop shopping at Amazon, and to come back to work. And she's going to tell me that's deflationary? Shocking. Economic data coming out this week. Actually, you know what? Let's take a step back here. This is the headline off of Market Watch. We are struggling, this is a quotation, we are struggling to find employees to help keep us up, manufacturers tell ISM. This is the survey. ISM manufacturing survey came in okay, but the theme is that they're struggling for employees. There's another report. Where is it? Is it the beige book? No. Two reports out last week that cited as a major concern the fact that the government is paying people to stay home. Here we go. The U.S. economy is on fire. It's not on fire. It's recovering. It's recovering. Demand is out there because people they're flush with cash in the short term. And the government is now pushing the big banks to issue more credit to people that don't have any credit history or poor credit history. So we're going to get more subprime debt going out there in the credit card market. U.S. economy is on fire, ISM shows, but labor and supply shortages are a big drag. Kathy Wood, wake up. So I strongly disagree with Kathy Wood. And the chart of the week to watch is going to be this chart here. The 10-year yield. It pulled back last week. If it breaks support, you're going to see semis run. You're going to see the Tues run. Growth is going to run. If this was a head fake, which I don't think it is in the very short term, if we begin to move up higher, you're going to see the banks run. Semis pull back, tech pull back, Tues pull back. Small caps should do well because they have a lot of regional banks in that sector. So watch the 10-year yield, very, very important. And as for economic data coming out this coming week, we have consumer credit coming out tomorrow, 3 p.m., the NFIB Small Business Survey. Guaranteed they'll be talking about the competition between small business and the government for labor. It's insanity. It's like you have Uncle Sam in a rowboat with you in the middle of the ocean, and Uncle Sam is taking a shotgun and blowing holes in the bottom of the boat. We get the trade deficit. That should be interesting. Nobody cares about that. Back in the 80s, 90s, everybody cared about the trade deficit. Now nobody cares. Job openings, that should be really good. I bet you that's going to beat. Wholesale inventories, initial jobless claims. Hopefully for those people that are losing jobs, this continues to come in. On Thursday, we get 8:30 CPI, Consumer Price Index. So watch out for this number. It came in very, very hot last month. So let's watch and see how it comes in this month. All right, let's take a look at some chart requests. McCart, I am on fire. I don't understand Kathy Woods. I don't understand her. I don't understand her buys, and I don't understand her logic about deflation. I tried to. I watched the whole damn thing, and I don't get it. All right. Let's do some... I didn't talk about our sponsor. Folks, this part of the show is going to be our member stock chart request. Our sponsor is TrendSpider. Automate your grunt work by using their automated technical analysis. Speed up your analysis by using their algorithms to identify support and resistance levels automatically. You're going to see me use it tonight. Improve your accuracy by using those automated trend lines. And in fact, on best stock charts I did today, I identified a breakout. I forgot on what chart it was. I forget what chart it was, but it's on best stock charts. I saw the breakout, and I didn't realize, because I wasn't using TrendSpider on my initial analysis, but there was another daily resistance level. Where is it? Now I gotta figure it out. LEBU. That's what it was. LEBU. So LEBU. Here's what I mean by leveraging. I have an alert set here. I'm going to remove this alert. Okay. I'm going to take the trend line off. So we have this is not where I wanted to put it. You know what? That works. This works. All right, so we had a breakout last week above resistance, but we have another resistance level right up here. And we want to see that overcome before we think about getting long of LEBU. I'm glad I came back to this. So while we had a great breakout on Friday, we still have a little bit more overhead supply above. So I didn't catch that on my initial go around. Actually, no, I want to break out. Now the record is corrected. And our alert is set. There it is up there. So 35% discount code below. Take advantage of it. And I give it away free to silver and gold level members. Let's go to our chart requests. FTOC. These are the ones that members submitted. This looks like a SPAC. Let's go to a weekly chart first. I like the daily chart, but let's go weekly first. All right. So this is a pretty easy one. The number to watch is 1038 per share. We want to see a breakout above that level. So our alert is set. We do have an automated trend line below. I'll take it off, throw it back on. So right there at that automated trend line, I'm going to set an alert just in case we get a pullback. And the reason why I think that we may get a pullback here is because on the weekly chart, we have a big wick. You can see on top here where this wick, that's a signal by the market that you have a lot of sellers up here. They've been holding for a while and they want their money back. So they're selling into strength. So you may get a retracement back down to the support level. If it holds, great place to open up a position. Now the daily chart doesn't look bad. You can see my alert is set down here. You have support right here in blue. That's the automated trend line. I wouldn't buy this right now. I would entertain it. If we bounced around the support level where I'm setting an alert right now for a couple of days, if it fails and it breaks, I would wait for the support level down here to get hit. Our number one of two means, just a note to myself, that there's a support level I prefer below. So not to get aggressive simply because our alert fires off. So we have 3 alerts set here. The ideal one that I would want to see is a retest of support down here. This may hold here. And if you get in here, you want to look to add more on a breakout above this resistance level up at around 1038 per share. That's FTOC. PSFE. Pay safe. I must have went over this one a long time ago. Let's get rid of this. This is expired. Oh, I know what I did here. I was waiting for a breakout. We got the breakout and then hammered. Wow. What a bloodbath. All right, let's get rid of this. This has no value anymore. This has no value anymore. This has no value anymore. What we want to do here, you could see that with the automated trend lines, that we have support immediately below. And I'd be looking for this to be support. I'll keep it active for a couple of weeks. I wouldn't chase it up unless the daily chart says something otherwise. Daily chart. Huh. Let's split the baby. If we begin to see a breakout above $12.42, you know what, let's bring this down a little bit more. $12.38. That would be interesting. And we'll keep it active for a few days. So support level number 1. This is the ideal entry point right down here. That way you could set up a tight stop right below. If you're going to chase it, wait for the breakout above $12.38 per share, and that's the trade. Rick Roofing, how you doing, brother? HHR. Oof. It's got hammered. All right, so you can see here, this weekly uptrend has been violated. Here's your lower band in blue, upper band in red. Last week, we broke down and closed below key support. And we did it on volume. Daily chart. Here's your gap down. You may get a rally back up to this support level here. Now the resistance. But I wouldn't be a buyer until we close back above $39.50 per share. So I would avoid this. Monthly chart, we already have a new monthly low. I would avoid this. Watch it, revisit it, see how it behaves. All right. How much time do we have? 6:35. Let's take a look at We have Gush from Justin. This is a leveraged ETF. Now, this is the ETF that puts you long of the oil and gas exploration sector. Monthly chart looks very strong. Weekly chart. We broke out last week. Watch for a retrace. Especially if yields come in this week. The energy sector did very well last week, as you could see. If yields pull back this week, you're going to see money rotate into growth, tech, FANG, all that stuff. That'll allow for the energy names to come in. So keep a close eye on that 10-year yield. And if you get a pullback to this weekly support level, then you're doing well. That would make for a great entry point. We'll keep this active for a month. And this is one that would be good for a options trade, generating income, selling naked puts, or opening up a strangle. But we're not going to buy the options. We're going to sell the options. We want to be the casino and not the gambler. Daily chart. Daily chart. A bit of an engulfing day on Friday. We're in the middle of a trading range, so I couldn't condone buying here. Here's your upper band again, using the automated trend lines. Lower band of support here in red, upper band in green. We can create an alert here as well. That's way too wide of sensitivity. Hold on. Let's bring this in a bit. There you go. Again, a note to myself letting me know that just because this gets hit, there's a better support level below. So don't be impulsive or overly aggressive. Touch, bounce, break. Alert is set. That's the trade here. And just remember you have resistance. If we had a continuation move up higher at around 110.29 per share. All right, let's see what we have. How much time do we have? 6:39. We got time. Let me see who's got requests. Costco, AMC. AMC. LABU. China, I did LABU earlier. And I did that on best stock charts as well. Clark, is BEEM a symbol? SONM? MN. Okay. All right. All right, let's do it. Chinner, I put it up when you were talking about it. Okay. So you saw it. Good. Okay, cool. Cool. All right, let's do it. AMC first. Falcon, I didn't block you. Your last comment just came through, so you're good. I didn't block anything. All right. Well, what can I say about AMC? What can I say? It's going to come to a horrible, horrible end for a lot of people. But can they push it up higher? Yeah, absolutely. Absolutely. I'm trying to give you the straightest possible. You know, I've said this a number of times in the past. You know, I look back at my trades during the .com bubble, and I was selling naked puts on the most highly volatile semi stocks out there. PMC Sierra, no longer in business; they were bought out. PMC Sierra, I had zero fear. You want to talk about diamond hands? I had diamond hands and a half. But in hindsight, in retrospect, you know, there is gravity in this market. And at some point in time, this is going to get the legs taken out from underneath it. I don't think it's marginable anymore. I correct me if I'm wrong on this. So I don't know when the end is going to be on AMC. I could have argued it back here. It would never recover. I would have been wrong. It's had a tight consolidation. The breakout was no great shock to me. The fact that I kept bringing up the chart of AMC and GameStop and the markets were selling off, yet these two were still holding up, that was a tell. So I didn't bash them at all. All I know is this, is that when I look at a chart and I see that we are trading well above the third standard deviation Bollinger Band, and we have RSI that's at 88.58 and was much higher last week before sellers moved in, you got to know that this is not going to end well. But I can make the argument looking at this daily chart here that we're breaking out. Here, all I need to do is this. There's your setup. There's your triangle formation. If we fail to hold the support level, expect selling. If we break out above this resistance level, expect buying. They're going to take it up higher again. So, would I put any money to work here? No way. No way. I'm getting too old for that. My heyday for these types of stocks has come and gone. I want more consistency. This is purely a speculative vehicle. Now, what could send it up higher is if they do add AMC and GameStop to the Russell 1000, because you're going to have funds that are out there that are going to be obligated to buy AMC at these prices. One day they're going to write a book about this. They're going to write books about it. What am I doing? 5 days. That's all I want. 5 days. There we go. We'll set up an alert here. So while I am warning quite a bit about these shares, that doesn't mean it can't go up higher. All you got to do is look at the daily chart, your triangle formation, and we may get a couple of days of sideways consolidation. If they pull it back and they hold this lower band of support and flash a reversal bar, they're taking it up higher. So, in all probability, they're going to give this one last gasp. Watch for a double top. The test is always at the top. So, good luck with it. I don't think you could even sell. I don't think you could sell options on this. At least on Schwab, you can't. Because I toyed around with it. Maybe you could do it not as a naked spread, but maybe you could do it as a credit spread. Meaning, not as a credit spread, as a debit spread. If you buy a call option, but at the same time sell a deeper out of the money call option, that call option, that deep out of the money, helps finance the purchase of your call option. So you may still be able to do that. And that's the only way I would make this trade to the long side. Yes, you cap your upside. However, you're financing a good portion of your trade, so you're reducing your risk. So just a thought. And I would never short this. I'll leave that to you younger folks. All right. What else we got here? Did I write this right? S-O-N-M? Or is it S-Q? S-O. S-O-N-M. Paul, Lizzie, I'll give it a look. I know Pat, one of our fellow members, did really, really well with Lizzie last week. Congrats to Pat if he's watching. Pat's probably sitting on his couch with his grandson watching. Okay, S-O-N-M. I don't like the weekly chart at all. This to me reminds me of a bear flag setup. Volume was pretty heavy last week. Let's go to the daily chart, see if that could change my mind a bit. Again, the value of the automated trend lines. So what we did last week was we actually broke out on Friday on a daily time frame, but we faded. Did we close back down below? Let's just say we closed at support. It wasn't a clean breakout. So I don't like this. One way to trade it is if you buy it here, use a tight stop down below. Now, I wouldn't use a tight stop on a penny stock, but you're going to have to use a mental stop to get out on a breakdown below 47 cents a share. And you could look to add more if you don't get stopped out on a close above 52 cents per share. A close above that mark would have you above, maybe a little bit higher. Let's make it 53 cents per share. You close above that mark, you're probably in a much better position. I'm not in love with the stock. I don't like the weekly chart. because I get the feeling that, again, what we're seeing is a bear flag setup. But I could be wrong. When I know I'm wrong is on a close above 53 cents per share. Monthly chart really quick. Yeah, I don't see a compelling reason to get involved here right now. It's a show me stock. It's got to show it shows that it's got some strength. Right now, it's floundering. And this time next week, I may change my mind on it. But right now, not loving it. Hey, Pat. MNMD. Mind Medicine. Weekly chart. All right, so this is an easy one. First, let me go to a monthly chart. Get a feel for where we've been. Nice run, consolidation. Okay. Weekly chart. Let's throw up the automated trend lines. And here's the line in the sand in red. Simple. We want to break out. But we want to see it close above that mark. I don't want to see it trading there intraday because it could fade. Daily chart. I would use that weekly alert. I think it looks pretty good. I think it's probably going to pop up higher. But I'll know when I'm wrong if we fail to hold the lows of Friday, which is or was at $3.11. Let's overlay the weekly support levels here and resistance levels. And here's where I have my alert set. This is a weekly resistance level on a daily chart. So I want to see a close above this resistance level in red before I got involved. Tight stop right below. And the breakout point would be at around $3 and let's say $3.20. That's the trade. BEM. Beam Global. Let's go to a monthly chart. I've never seen this. Ooh. Those are technical terms. I like the setup here. A lot of red, and that's okay. This was a high flyer, and like I always like to say, this was not going to end well. Abel, thank you very much for the super chat. In euros, no less. I never got a super chat in euros. Thank you very much. Fastly, you got it, brother. Okay, so what we're doing here on a monthly time frame is that we're breaking out this month. And as you can see here with the automated trend lines, we got stopped dead at two resistance levels, and then it collapsed. But I'll tell you, this has got a lot of room to the upside. I think the first stop could quite very well be right here. $50.40. Where do we close? 31.59. Very sexy from a risk-reward perspective. I want to be out of this at 28.42 on a close. Weekly chart. Here's that breakout yet again. We'll overlay the monthly resistance levels above. I don't know if they're going to show here. Yeah, they are going to show. So we have a breakout. We're going to have a little bit of resistance up here. Right at this volume shelf, because it was support for a couple of weeks and ultimately it succumbed. It failed. So I really like it on a rally up and through 35.54. And in fact, I'm going to create an alert there. Just a note to myself, we'll keep this active for a couple of weeks. So our alerts are set here. We're good to go. It's a good looking chart. I think the lows have been put in. And I think that you're going to see some buyers move in here and bring it back up. And the good part is you don't have a ton of, you have overhead supply, but you don't have stiff. You don't have a huge amount of rough volume shelves to fight through. You're right at 1 and 2. You break out above those, and you'll probably rally up to $50.40 pretty quickly. So I like the trade, looking interesting. Beam, a buy. Lizzie, actually, let's go do Fastly first. We'll do I did a video on Fastly a while ago. It's on YouTube. I didn't like their exposure to TikTok. But this month, we have not made a new monthly low. And I drew these support levels a long time ago, probably when I did the video. And we bounced off the lowest one. We bounced. So this now becomes interesting to me because we've stopped going down. Rule number one, when you're buying a stock that's in the basement, it's got to stop going down. So check that box. So now that we have a validation that we have good support below at 44.29, now let's do a deeper dive. Weekly chart. A bit of a bear flag here. See, we've been putting in, what do we have? 4 weeks, consecutive weeks of rising price, right? We faded off the highs for the past 2 weeks. What else is faded? Volume. Now, I don't believe that we're going to break down to new lower lows. Meaning on a monthly time frame, meaning taking out last month's lows. I think what we're going to do is we're going to pull back and probably do a retest or get a higher low put in. That is where I would want to act on Fastly, on that pullback. This does not get me attracted to the shares, the fact that we've drifted up, right? We've done that before. We've drifted up, failed. We're drifting up. We haven't pulled back yet to do a retest of prior lows, nor have we put in a higher low. That's what we're looking for at current. Daily chart. Now you can see the daily chart. It's lackluster. Basically, you know, if you're a short in Fastly, for whatever reason, shorts have, you want to talk about diamond hands, shorts are stubborn to get out of their positions. And right now, you're looking at this chart and you're saying, yeah, you know what? It's hit lows. They want things to go to zero. I don't believe the stock is going to zero. But the only thing that's going to shake them out of their positions is when you start pulling back and then rallying off those lows. And then once you begin to, let's do a hypothetical. Let's say that in the very, very short term, last week's highs are your short-term highs, meaning for the next couple of weeks. You pull back, and they're expecting a new lower low. They're conditioned now. The shorts are conditioned. They're going to stick with the trade. But all of a sudden, it doesn't take out this prior low. It puts in a higher low. And then all of a sudden, you start to eke up towards these recent highs. You break out. That is when you get your short cover and rally. So I don't think that this pullback, this 2-day pullback, is enough. I would like to see a further pullback and a higher low get put in. Then we can take a look at buying Fastly. So it's coming close to being a buy. I'm not ready quite yet. I'm not convinced quite yet, but I'm very, very optimistic. Lizzie, and again, thanks for the super chat. Appreciate that. On the other thing with Fastly, yields, watch yields. Technology, high beta stock, watch yields. You want yields to go down, right? So if yields start going up, that's bearish for Fastly. Lizzie. Looks good. You got a monthly triangle formation forming. Let's illustrate it. Ugh. I failed arts and crafts. There we go. Pop. Excuse me. There's your triangle formation. Weekly chart. We're at the apex of the triangle formation. What I would do here is watch for a retest of the lower band. I think you're going to get that. And then you want to add to that position on a breakout. All right. Come on, Bob. And we'll keep this active for, let's say, 20 days. And we're good to go. I still think you're going to get some backing and filling here on Lizzie. Daily chart. You know, you broke out here. You're doing a retest. Wait for that support level to get tested. You saw a big wick, shadow, topping tail, call it cupcake. It doesn't matter. There are sellers above. So watch for another pullback. Rick, ANVS. I can't do all those, brothers. I'm running out of time. As a matter of fact, I'm over. Sorry, man. Pick out your favorite one, Rick, okay? Shop. I like Shop. I don't like the monthly price action so far, but it's way too early in the month to make a call here. Let's go back to the monthly chart for a second. The takeaway from this chart is that we have a multi-month consolidation, 1251.78, stiff resistance, but it's critical resistance. Got to break out above it. Weekly chart, bad week last week, bearish key reversal bar, support held. If you wanted to buy it here, okay, tight stop right below. If we put in a new weekly low earlier this week, I would wait and see how the week unfolds. I'd not be a buyer. In fact, the daily chart, not loving this at all. I would avoid. We broke down on Thursday, bearish key reversal bar on Friday. You had yields that would drop like a rock, yet Shopify flashed a bearish reversal bar. That's not good. So something's up here. Horrible price action. If you're looking at a place to buy, look at 1186.65 per share. You're welcome, Paul. All right, folks. You're welcome, Franklin. Rick, I'm going to take your first one, all right? I don't want to leave you out there in the cold. We'll leave this as the last one. ANVS. Rick's been around too long. I respect his participation. All right. Anavis Biotech. I like the biotech sector. You're welcome, McCarter. Anytime, brother. Thanks for joining in. Very extended here in a monthly time frame. Warning flag on the track. You're trading above the third standard deviation Bollinger Band. Can it go up higher? Yes, but it won't end well. Weekly chart. This is probably going up higher. All right, so this to me screams of if we make a new weekly high, the high last week was what? 67.30. If we rally through that mark this week, we're probably going up higher. If this thing goes parabolic, like AMC, GME, like parabolic, which it could certainly do, we could head up here to this upper band of resistance. Automated trend lines, folks. Powerful stuff. Right up here. And that would put you at par. So, me, if we put in that new weekly high and I got long, the first thing I would do is put in a trailing stop, 5%, 7%. Let the market take you out. Because you could have a big run up higher here, tight trailing stop loss order, and get out. And once that fires off, that trailing stop, don't get back in. Don't get back in. All right, everyone. Thanks for joining in. Have a great week. Don't forget, TrendSpider 35% discount code below. I give it away to silver and gold level members. Take care. Have a profitable trading week. Be good.